So Alibaba is this giant e-commerce company out in China, has a lot of similarities to Amazon and is therefore oftentimes referred to as the sort of like Amazon of China. And as a company, they've done an amazing job over the years, constantly delivering very high sales with equally impressive growth to go along with it. And as such, the stock has performed very well. It's really skyrocketed over the years. And I actually own some Alibaba stock myself. However, over the past few months, the stock has crashed by over 30%. Now, it did recover a little bit this past week, but even at the time of this recording, their stock is still down about 24% from their highs. And that's a big deal. Imagine if something like Amazon was to drop, around 30%, we'd probably all be rushing in to buy the stock. So with all of that in mind, is now the time to be buying Alibaba stock? Well, that's what we're going to cover in today's video. And we're going to talk about why the stock crashed. And I'll talk about, there's some really big concerns here, guys. So I'm going to cover all of those. I'll give you my opinion on everything that's going on. A lot of risk with this stock, but potentially a lot of reward too. So I'm just going to give my opinion on all the different sides, and I'll let you know if I plan to buy any more of the stock myself, if I'm just going to be holding, or if I'm even thinking about selling, because again, there are some big concerns here and we'll cover all of them. I hope you guys enjoy the video. Please hit that like button if you do enjoy this update, and let's just go ahead and start. Let's pull up the stock chart and let's take a closer look at why it's been falling. Okay, now they're still up about 250% over the past 5 years, so very strong performance. But you can see at the end there how they dropped by over 30%. It was actually pretty close to 35% of a drop, very large drop there. But they did bounce back a little at the end, leaving them down about 24% today from those highs, and just barely in the lower part of their 52-week range, with the majority of those drops coming in November with a drop of about 14%, and then in December with a drop of about 12%. Anyway, let's talk about why the stock crashed in the first place. And I believe there's a few different reasons, all of which are very big deals in my opinion. First of all, in October, before the stock really started crashing, Jack Ma, who is the founder of Alibaba and currently China's richest man, made a speech where he was very critical of Chinese financial regulators, accusing them of stifling competition, and referred to Chinese banks as pawn shops that are only willing to lend to those with collateral and therefore are not very friendly towards like the average person. Well, if there's one thing that we know about the Chinese Communist Party, unfortunately, it's that they don't really like to be criticized. Now, the speech was given only a couple weeks before the IPO of Ant Group, which is a spun-off fintech payments company from Alibaba, who I believe still owns like a third of them, by the way. They own like a third of Ant Group. And then Ant Group is probably the most famous for their Alipay service, which is the most widely used fintech product in the entire world right now, with over 1.3 billion users. It's relatively close to the size of China's entire population, and I think it's around 3 to 4 times larger than PayPal, just to give you an idea of the massive size of Alipay. So that makes Ant Group this really big deal. Now, that IPO was expected to raise around $35 billion, which would have made it the largest IPO in history. However, following those criticisms from Jack Ma, China decided to not only stop the IPO listing, which many speculate that China was already worried about Ant Group because they're strong competition to Chinese banks, and they could end up disrupting the economy because of the way that they do business, which may or may not be a fair criticism depending on who you ask. But they decided to also slap on a bunch of new regulations on the company, on Ant Group, and they even went as far as to launch an antitrust investigation into Alibaba itself, accusing the e-commerce giants of forcing merchants on the platform to sell exclusively there, making it harder for Alibaba rivals to compete against the giant corporation. And this show of power, basically checking these giant companies to show them who's really in charge, along with the potential of heavy regulations, especially to Alibaba and Ant Group, was a major shock to investors, and as you might expect, the stock proceeded to crash. And sadly, to this day, Jack Ma has actually not been heard from again. So who even knows what happened to him? It's pretty scary stuff. After his critical speech of China, the government summoned him for a meeting and nobody has seen him since. I think that was like since late October. Now, CNBC, let's clear a couple of things up here because CNBC did report earlier this month that he's just lying low. And I saw a similar report from Reuters, I believe, as well. But they're basically saying that he's just lying low because of everything going on. But the source for that was just some person that they claim is familiar with the matter, which to be honest is something that I'm not a big fan of. These like big media companies, they always just make these claims and they always say, oh, is someone familiar with the matter, but they don't ever actually give you like any real proof of anything. And I have a feeling that they do that just because they want to get things out there and get clicks right away. So a lot of times, I don't know, I'm not accusing them of making stuff up. I'm just saying that, it's a little sketchy when they just say, oh, some person familiar with the matter, and you don't actually even know who it is or anything. But anyway, at this point, nobody really knows for sure what's going on or where he is or anything. There's just a lot of speculation going around. So hopefully Jack Ma is fine and just lying low. But again, I can't say for sure at the time of this recording. I don't know the answer to those questions. But let me know down below if you guys heard anything else, or maybe there's an update by the time you watch this video. Again, hoping for the best all around. Okay, now anyway, as if all of this wasn't bad enough news for Alibaba and frankly any other company based in China, the Trump administration decided to ban a number of Chinese stocks in America who they claim have ties to the Chinese military and therefore pose a national security risk to America. And of course, investors feared that Alibaba might be on that list, which would be a huge deal since over 30% of the stock is actually owned by US investors. So just imagine like over 30% of their investor base having to sell the stock. That would be like a crushing blow since it would probably snowball into other countries selling some as well. So not good news for Alibaba. Now, fortunately for Alibaba investors though, it appears now that Alibaba will indeed not be included on the ban list. I think in the end it was mostly like a bunch of smaller private subsidiaries with only like three major stocks being a few telecom giants that got banned, which the executive order from Trump gave investors about a year to sell those. So anyway, that led to some recovery for Alibaba stock because of that optimism there, especially since everyone expects also Biden to be much friendlier to China than Trump in the coming years. So, the speculation is that Biden wouldn't ban Alibaba in the coming years. But still, with everything else added to it, we're talking about a ton of risk here. And it led to a lot of institutional investors trimming their Chinese stocks just to lower their exposure to all of that risk, which I definitely cannot blame them for. And that is why Alibaba stock continues to trade so much lower than it was just a few months ago. And that's basically where we are today. So the question remains, where do we go from here? As someone who already owns Alibaba stock, should I be buying, should I be holding, or should I even consider selling? Well, if it wasn't for all of this chaos going on right now, I would say, and especially if Alibaba was a US-based company in stock, I would say that right here, especially under $300, this is a screaming buy. I would say that there's many reasons to be bullish on Alibaba as a company and a stock. Alibaba is not only already the largest e-commerce company in China with close to 800 million customers, but they also sell internationally as well with over 180 million customers abroad and also through other sites like AliExpress, for example, which is a site for buying like really cheap Chinese products here in the United States. But even on Amazon a lot of sellers actually buy in bulk from Alibaba and then they resell on Amazon. So again, Alibaba is like a really big kind of global player in a lot of ways. But even if we only consider China alone, that e-commerce market is around 3 to 4 times larger than the United States. And yet Amazon's market cap is around 2.5 times larger than that of Alibaba's. And I don't make that comparison to suggest that Alibaba is a better stock. Amazon is obviously a much safer investment and therefore deserves the premium price tag. But I make that comparison just to show you that there is still plenty of room for Alibaba stock to grow larger in the future. And I'd be very surprised if it doesn't easily surpass a $1 trillion market cap over the next few years. But keeping the comparisons to Amazon going, Alibaba also has a giant cloud computing platform that already commands the #1 largest market share in the Asia Pacific region and even commands the 3rd largest market share in the entire world. And despite that already massive size, the segment still managed to grow by over 60% last year, and my guess is that it's only going to grow even more during the global health crisis as more people stay home and rely on cloud servers. Not to mention the future of artificial intelligence, the Internet of Things, and so on, that will only fuel even more growth for Alibaba and, of course, their cloud segment. But they're not just relying on internet use. Alibaba is even taking over traditional brick and mortar retail as well through their new retail initiative, where they upgrade and integrate brick and mortar stores with their online shopping services. It's kind of like a win-win. You help these stores kind of survive, but they integrate Alibaba services, so they both kind of benefit from it. I'm not saying it's a good or a bad thing. I'm just saying that's how they sell it. But anyway, that's a big deal since China's total retail sales are estimated at over $6 trillion in 2020, even surpassing the United States. And the latest example of this ambition of Alibaba taking over traditional retail is a recent increase in their stake by over $3.5 billion of a giant Chinese hypermarket and supermarket company that operates close to 500 individual stores, giving Alibaba even more access to a giant distribution network of stores and storage facilities that they will utilize to implement grocery delivery throughout China, which in my opinion, is exactly where the grocery market is heading in the future. Not to mention that Alibaba even competes in other exciting and high growth markets as well, like gaming with their new Three Kingdoms game already generating the 5th most revenue on the iOS App Store in the entire world. And they're even tackling electric vehicles with the launch of a new EV in partnership with China's largest automaker that will use a solid state battery from the same supplier of Tesla and computing chips from Nvidia. All of this ambition, though, has led to amazing financials for Alibaba. We're talking revenue of over $100 billion expected this year, and yet it's still growth of almost 50%. That's insane. It's almost impossible to find companies putting up those type of numbers. Even their profits have been steadily increasing every year by large amounts. These numbers here are in Chinese yuan, but that's still tens of billions of dollars in US dollars, and that's of net income. And yet, because of the weakened stock price, the valuation is dirt cheap with a forward P ratio of less than 18 and a PEG ratio of less than 1. It's practically impossible to find a US company with these type of numbers and such a low valuation to go with it. Really, the only way that you can get a stock like this is by taking on that massive risk that you're pretty much forced to take on if you choose to own a Chinese stock, as opposed to owning like a much safer American company and stock. And ultimately, that's what this all comes down to, is a huge amount of risk that you have to take on in owning a Chinese stock, which, by the way, I didn't even talk about the fact that Chinese stocks, many of them, especially including Alibaba, use a VIE structure, which I've covered in previous videos. But what it basically means is that you as an investor actually don't have a lot of ownership rights to the company and their assets, so you can get screwed over in a lot of different ways. I'm not saying that would happen. I think it is pretty unlikely, but it's possible. And it's also, again, possible that at any moment America can ban Chinese stocks, or Alibaba in particular, and then you might be forced to sell at a huge loss, maybe a 30, 40, 50% loss. That's a big deal, especially to a lot of people. Another thing that's not even considering is the fact that China could be regulating Alibaba. Maybe they split them up, and that could be some concern as well. Maybe the stock dips because of that also. So I don't really see this as a good investment stock, but as a speculative stock, as a spec play, and realizing and accepting the risk that you're taking with a stock like this, and you're investing or you're buying the stock with money that you are, you accept the fact that you could lose that money. As long as you accept those risks, then I do think that this is a screaming buy. I do think that this is a pretty good buy here, and I'll probably be buying some myself, but as a spec play, realizing the risk that I'm taking here, because there is significant risk. But even if China was to break up Alibaba into separate pieces, I still think that the sum of all those parts is worth a lot more than where the stock is trading today. And I also think that Biden, whether it's a good thing or a bad thing, I do think that Biden is going to be a lot friendlier to China. And I really don't think he would be banning Alibaba in the next few years. Trump maybe, but Biden, I wouldn't expect him to do that. Again, whether that's a good thing or a bad thing, that's up to you to decide. But I personally wouldn't really expect that. So I think as a spec play, I think it is a pretty good stock because I definitely think that Alibaba is going to be much larger in the future, and I think that the stock can very easily double over the next like 5 years or so. I really think that their market cap should be a lot higher in the coming years. So for me, this is a spec play. I'll probably be picking up a little bit more myself, but I realize the risk that I'm taking. And if I end up losing money on it, well, I accepted that risk. So that's my personal opinion. Not telling you guys what to do, but let me know how you guys feel about this one. I know there's going to be a lot of divided people. Some people are going to say, I would never touch this. Some people are going to say, this is an obvious buy. So it's going to be very polarizing. So I'm curious to see the comments down there. Please keep it friendly. But I'm curious to hear your thoughts down there because I know there's going to be two polarized sides there for sure. But anyway, thank you guys for watching the video. Please hit the like button if you enjoyed this update. I've got more videos coming for you guys in the future, and I'll see you guys in the next one. Take care. Bye-bye.